once again, the Patriot Radio News Hour, the very last show before Christmas. We made it to a Friday, so way to go. I'm sure all of you are stressing out right now about this time of the year, but don't worry, for an hour, we'll focus on something else. Well, not quite an hour, because last night my wife had said, and actually it was more like 2 days ago, she says to me, "What did you get Wendy and Arlene?" And I looked at her and I said, "What do you mean, what did I get them?" She goes, for Christmas, what'd you get them? And I said, "I didn't get them anything. They get to be with me like almost every day. I mean, isn't that enough?" And my wife she didn't think that was very funny. And needless to say, she took care of both of them, and I brought in their Christmas presents today. So once again, my wife is much better than I am. It was so funny because I was talking to Ramon, and we were talking about, we're off Monday and Tuesday. So this show is going to play again Monday, Tuesday. We won't update the website on Monday and Tuesday. I'm giving Ramon a little break. He hasn't been feeling all that well. And we were talking about, big plans. What are the big plans? And I said, well, Christmas is at our house. So we do Thanksgiving at Eric and Lori's, and then Christmas is at our house. And I said, yeah, it's great because I don't really do anything, but my house gets really clean. Because my wife wants it to look good for everybody. It gets really clean, and I get to eat a lot of good food, so I just love it. So anyway, that's my story for the day. Our toll-free number, 800-951-0592. The website at allamericangold.com, which Ramon updates. Not quite, every Monday through Friday, but pretty close. But we will not have the site updated over the weekend or Monday, Tuesday, as Ramon is going to take a few days off and hopefully get rid of whatever it is that has been ailing him. And we had a ton of stuff come out today. We got the tax cut signed off on. They added another 3 weeks or 4 weeks to government spending, so they won't have to come up with that answer until January. We had consumer confidence. We had new home sales. We had durable goods. I mean, we had a lot of stuff. I don't talk a ton about Bitcoin, but today, a tough week for Bitcoin. But who knows? You know what? Hey, next week will be a different week. I did see it got all the way down to, I think, 10,000 and change. Today it was down $4,000 at one point today. But Warren Buffett's, Charlie Munger, Warren Buffett's right-hand man, he was out bashing it today as well. But, we'll see. I don't know. Like I said, I don't necessarily believe the premise that they try to say, a lot of these Bitcoin guys didn't buy gold because they were buying the Bitcoin. Maybe, and I guess, to be true, sure, I'm sure there was a little of that, but at the end of the day, the thing that's been money for 5,000 years is going to continue to be. Matter of fact, big move, bigger move. Gold's up almost $8, $12.75. Silver up another 22 cents, $16.37, and rising. Silver's now over $1 above the bottoms. Remember, and we keep talking about it. There's sometimes it's just better to buy than others, right? And December has seemingly been one of the best times to buy gold, at least in like the last 3 and 4 years. We're kind of in this December bottom pattern, right around that Federal Reserve meeting. And we don't know. We can't pinpoint. It'd be great. You know what? I wouldn't have to do the show. Can you imagine if I didn't have to do this show because I was so good at today's the bottom? But, I can just give, guidelines. Hey, the week before to the week after, this time around, it happened before. And sometimes it's after, but we just kind of know this is what it's going to be, and now we're starting to see. I think we're going to see, gold's up over 12% this year. Any other year, you'd be like, hey, that's a pretty good year. But this year, we've had the weird year where Wall Street's had this incredible rally, which is kind of now that the tax cut's been signed, and Wall Street's actually down a little bit today. I think we're going to get more sell the news. We had a lot of buy the rumor. We had the Bitcoin phenomenon today or this year as well. I don't know if that's done or not. Who knows? I mean, it could go right back up. Monday it could be, I guess Tuesday. It could be up $5,000. I don't know, but neither here nor there. Another good year in the gold market. Silver's actually looks like it got back into positive territory. I still think silver's going to outperform. Both of them are going to have a pretty strong 2018 as well. And we'll talk about that today. We'll go over all of the reports that came out today because there was a bunch of them. I mean, durable goods is a big report. New home sales, it was a big, big number. And then we also had more store closings here to end the year. And one of them, which was on our list, remember, I think it was last week we did the list of I think it was restaurants that we were saying we're going to close. Subway topping the list. We had a mattress firm came out and announcing hundreds of stores closing as well. So we'll try to get you up to date before the Christmas holiday. We're going to talk about where gold and silver are going to be in 2018, things to look for in 2018 as well as we wind down 2017. Patriot Radio News Hour. We'll be right back. Patriot Radio News Hour, 800-951-0592. Gold's up about 8 now, $12.75 and change. Silver, again, up about 25 cents, having a very nice end of the year rally. Gold's been up, like I said, gold's up almost 13, really, 12.7% for the year. Silver, it's only up a couple percent. But I think silver's going to have a very big 2018, and we'll get into that here in a minute. I was assaulted during the break. Arlene came into the studio, and she gave me a hug and a kiss. It was terrible all over. She was so excited because my wife actually listens to them. I don't, they talk a lot, Wendy and Arlene and blah, blah, blah. And apparently Arlene wanted this clipboard thing, and my wife got it for her. She was so excited about it. And she came in here and assaulted me, and I was just like, stop it. I didn't do anything. It's from my wife. Leave me alone. And, with this day and age, who knows what that means. But nonetheless, Merry Christmas, everybody. For those of you out there that are having Christmas at your home, for a lot of us, and I got, what, I'm an old schooler, I admit it. I grew up in, where I'm an Italian, and you're like, Italian? You don't have an Italian name. It was Giaquinto, is when my great-grandfather came over on the boat, and then long story short, it got changed, but nonetheless, my dad's family's from Naples. My mom's family, her last name Del Nero, no relationship to the actor, and they're from Sicily. And so, yeah, I'm an Italian, and I grew up in the old Italian neighborhood. I didn't grow up in an Italian neighborhood. My parents did. My grandparents definitely did. And I think I've told the story about how my mom, she lived in this part of Syracuse called The Block. And it was just called The Block because it was this apartment complex that it formed it was a city block, and it just was a big square where the middle was empty. So it, the middle was the courtyard, if you will, and they called it The Block, and everybody that lived in the block was an Italian. I mean, and my mom's family lived next to her aunt and uncle's family who lived next to their aunt and uncle's family who lived next to grandma. That's just how it was. And I guess I'm a traditionalist, My wife cooks it and I eat it. I make a mess, she cleans it up type thing, And so I feel bad because for me, I really don't do a lot. I really don't. I don't have to. My wife will have the house all spick and span, and I'll just sit around waiting to eat. So I'm so excited. So yay! Christmas time is here. It actually got cold. I had the heater on for the first time this winter. I had the heater on my way to work. My wife actually turned the heater on last night. Got into the high 30s, which here in Arizona, that's freezing to death. And all of us had jackets on and long pants and the whole 9 yards. But they said that's it. I think today it's supposed to start warming up, and then it's going to be a great Christmas. So enough of that. Anyway, we had a lot of economic data come out today. The first has to be the new home sales that came out this morning. So remember, we had a good number on existing home sales. A lot of that came in the South. We kind of speculated that that's probably, a bounce back from the hurricanes. And you know what? The other thing, too, is probably got people buying because they knew the tax cuts and the rate hikes were coming. But today we got new home sales. It was the biggest monthly increase since January of 1992. The number came in at 700 on an annualized rate for November. If we sold this many homes every month like we did in November, we would have sold 733,000 new homes on an annualized rate. And it was up. That was a big number. Now, I will say this. I don't want to poo-poo it because it was a good number. They did go back and revise lower October as an example. They lowered October by 60,000 homes. They went back in the last few months and lowered the total by over 70,000 homes, but still a very, very good number. The big move, though, came in the West, according to the data, which was up 31%. The South was up 15%. The Northeast was up 9%. The Midwest was up 7%. The median home price, $318,700. The average selling price, $377,000. 15% of all new homes in November cost more than $500,000. New home sales on pace for $613,000. That's going to be depending on what December comes in. Last year, new homes was $561,000. So we're doing better on new homes. The problem is that's about 10% of the market. The existing home market, the bigger share, we're actually down. Inventory, about 5 months worth of inventory. So that was a good number. Now my worry is did it take a lot of the sales out of the November, January, February as people were buying homes? If they were, and again, I don't know if they were people, if they were investors, who they were, they don't say. If they were out buying homes before the rate hike and the tax cut and all that, trying to save some money, and we're going to have a big, reversal going into 2018. We'll have to wait and see. Durable goods came out this morning, and that one missed. And they actually missed by quite a bit. They were expecting durable goods to be up a little over 2%. Came in at 1.3%. Of course, durable goods, those are the things lasting longer than 3 years. And you would think, hey, with the home sales doing so well, that number would have been a little better. But nonetheless, that came in a little light. Consumer confidence also went down again. This was the Michigan number. And again, I don't put a lot of stock in the consumer confidence number because, like I said, I still don't, I don't know who's ever been called by them. right? I mean, and granted, I'm one of those guys where if I don't know, in the era of the caller ID and the cell phone era, I think, and I don't know, if I don't know the number, I don't answer it. So maybe they're trying to call me and I'm just not answering it, and maybe that's the problem. Still not going to answer it, but neither here nor there. That number came in a little light, so we kind of had the mixed bag in the data, the consumer, and then we had consumer spending and also consumer wages. Wages missed. Wages came in below expectation, and again, I'm not all that surprised by that because I know the jobs that are being created out there. They're just not. There's a lot of them, but they're not great. They're not great jobs out there. Wages missed. Consumer spending, that was actually well above wages. So people are like, everyone busted out the credit cards in November. I think a lot of people maybe were already spending their great tax cuts that they are hopefully you're getting. But that number also had the markets a little worried because you don't like to see that. You'd like to see wages rising and spending right below what wages are, right? So, hey, we're adding to savings. The savings rate now is the lowest it's been in 12 years. So we think about where we're going here. And like I said, you got to factor out the noise, right? The tax cuts, it is what it is. I don't know what it'll do. I know this. They're trying to claim, look at all these companies. They're doing this and that. We've seen that movie. Oh, yeah, we're going to give, AT&T's going to give everyone $1,000. Well, they normally hand out bonuses around this time. Now, whether or not they were or weren't, that's not $4,000. And it's not like they said, hey, we're going to give it to you every year. So we'll have to see. A couple of the banks, Wells Fargo, and I forget who the other one said, hey, we're going to go to $15. All the banks are already there. And I don't want to have it be, sound like bad news, but it's not as great as they're making it out to me, nor as it ever is. We know that, but it's not a bad thing. I mean, it's a start. The problem is that, there wasn't that many. Hopefully we'll see more, but so far, I know Boeing said that they were going to hire some people, so I thought that was a good thing. Other than that, we'll have to wait and see. Here's what we know. Here's what we know for a fact. We're in more debt than we've ever been. Wages aren't growing, and they say they grew 2%. I don't know if that's, they put a lot of fluff in that number. What I mean by that is, they count, the business says, hey, well, healthcare expenses cost us this, and so they act like you got it in your paycheck when you really didn't, and things of that nature. But the savings rate now is also at a 12-year low. So we got debt at all-time high, savings rates way down, and that doesn't bode well for the consumer. So we're going to have to really hope that business picks it up here in 2018. But then again, we had durable goods number come out today. That didn't sound like they were picking it up. Yesterday, over the last few days, we had New York, Philly, Chicago. They're the big manufacturing areas. All the Richmond doesn't really count, St. Louis, and because they don't have a lot of it there. But those three, two were down, and then one was up. New York and Chicago were down. Philly was up. Kind of the same thing that we've been dealing with for the last 9 years or so, which is we got a little bit of good stuff, we got a little bit of bad stuff. How's all of it going to shake out? Yesterday we talked about now USA Today saying budget deficit could hit $1 trillion in 2018. David Walker was out today. He was on Fox, and he may have been on both, but I saw him on Fox. And at least I think it was Fox. It was early. I was on the billionaire channels, And for those of you that don't remember him, he was the comptroller of the currency during Bush, the younger Bush. And he had been out, remember, and he was talking about, and he was one of those guys trying to sound the alarm on the deficit and all of the worries about Congress and spending, and he wants to scrap the debt limit as well. But he wants to replace it with a more like a debt to GDP rule, which I think would be very, very interesting, which remember, and I brought this up, a month ago? All during the 90s, and then you heard it a lot in the early 2000s, and then since the crisis hit, we haven't heard it at all, which was it was okay that the United States was going into debt because the debt to GDP ratio, as long as that stayed below 3%, everything somehow was going to be fine. Now we've got a debt to GDP level that could be surpassing 5%, and nobody's talking about it. David Walker brought it up today. We'll talk about that next.
This is the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Mrs. Schlafly was a courageous and articulate voice for traditional values and common sense for more than 70 years. And now, from the archives of Phyllis Schlafly Eagles, here is Phyllis Schlafly.
On this day, let's ask the question, is the United States a Christian nation? A lot of people vehemently deny this. However, it is a fact of history that America was founded as a Christian nation. The founders of the first American colonies were believing Christians, mostly from England plus a few other countries in Western Europe, most of whom came here for religious reasons, to worship in a place free from persecution. The Puritan colonies of Massachusetts and Connecticut had governing systems explicitly based on biblical teaching, and they had many laws with a religious purpose. In 1619, Virginia adopted measures requiring church attendance. All the original 13 colonies in the 1770s had laws mandating official support for religious belief and practice. 9 states had established churches. The established churches were mostly congregational in New England states and Episcopal in southern states. Even after the U.S. Constitution and the First Amendment were ratified, the states had a network of religious requirements, and Congress adopted many bills to promote religious causes. Congress appropriated money to teach Christianity to the Indians and adopted the Northwest Ordinance, whose specific purpose was to advance religion and morality. Congress ordered the printing of the first English-language Bible printed in America. Congress approved chaplains and religious services for our soldiers. After our new government was set up under the Constitution, Congress called on all citizens to a day of thanksgiving in these words: "We acknowledge with grateful hearts the many signal favors of Almighty God, especially by affording us an opportunity peacefully to establish a constitutional government for our safety and happiness." History tells us that the American nation was founded as a place where God was worshipped, the Bible honored, and the tenets of the Christian faith routinely supported by federal, state, and local governments.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. When America turns our back on our Christian heritage, we shouldn't be surprised when biblical precepts like honesty, kindness, respect, justice, and freedom are abandoned. At phyllisschlafly.com, we still believe in rights endowed by our Creator. If you agree, find out more at phyllisschlafly.com. Thanks for listening to the Phyllis Schlafly Report.
He was backwards.
Welcome back, Patriot Radio News Hour. Talking about what David Walker was out here today, and I was disappointed. Here's a guy. Anytime he has been on, I'd either talk about it or we'd play the clip, or because he's been such an advocate of, hey, listen, this isn't going to end well. And he was out there today, and he talked about we need to get rid of the debt limit thing. And I'm like, why? Right? You know, and I guess I know why, because let's face it, nobody's going to balance the budget ever again. That's never going to happen. But his suggestion, actually, after a minute, after I got over being disappointed, I started to think, you know what? Interesting. Let's replace it with a debt to GDP number. Now, here was the disappointing part. He didn't give a number, which I was waiting for. I'm like, oh, please give a number. And I knew it wasn't going to be 3%, but neither here nor there. He didn't say what the number should be. But he said at that point, then you take it out of Congress's hands. Right? And they talked about how, hey, no one wants to deal with the entitlements. Mitch McConnell's already said, hey, we're not even doing it. 2018, forget it. We're not doing Social Security. We're not doing Medicare. I mean, it's incredible. And even though I tell you how bad it's going to be, you can't guess. You can't fathom it. In your mind, you just can't wrap your head around it, because since nobody talks about it, you don't want to know. These two programs, it's devastating how bad it's going to be. Social Security is not making it to 2034 or 2032 or 2030. It's just not. And Medicaid, it's even worse. And actually, already, some of the programs are already insolvent, right? Like Social Security Disability Fund, that's already insolvent. They've had to, play some games to make it appear otherwise. But he was talking about, hey, once the debt level gets to a certain point, so let's just say the GDP's $20 trillion. We're not there yet, but let's hope the Trump tax cuts, right? Let's just say we get there. Okay, so we get to $20 trillion. And the deficit, and I don't know what number he wanted to use, whether it's the good one or the bad one, I don't know. He brought up both of them in his interview this morning. But let's just say we get the good number is $1 trillion. And by the way, the difference between the numbers, just so you know what is in there. Fannie and Freddie is one piece, and then student loans is another piece. That they don't count that stuff. And we know from the student loans anyway, right? Over 50% of that we're going to have to pay for. Because that's really, when you talk about, I know right now they admit to, they say, I think the number's like 14 or 13% are in default. But what they don't tell you is there's like another 30% that are in some form of deferment, or hey, they're not really, they're making the interest payment, but they're not actually paying down the debt or whatever it may be. And really, we're almost at somewhere close to 50% of the people aren't paying on student loans. And, that's $1.5 trillion already. And so those are things that are kind of the difference between what I'll call the real number and the good number, just to kind of give you some color as to what that is. And we know, hey, when it really hits the fan, what happens? People don't pay. And so the fact that they pretend that doesn't count is worrisome, but neither here nor there. Let's just say GDP's $20 trillion and we do USA Today and we hit $1 trillion. That's 5%. Almost double the 3% that we grew up with. Right? And a lot of you out there are not, because you remember this. Oh, it's okay during the Reagan years. It's okay because, it's below 3%. Right? And George Bush Sr. by Bill Clinton, remember, they were going to fix it all because they were going to pay it all off. And those are still the best. I still love that one with Alan Greenspan. He really did. He thought he had done it. Listen, at that point, I was a Kool-Aid drinker. probably the best thing that happened in my life is I met my wife, which led me to Eric, which led me to here. But here's the problem. We'll be at 5% this year, this fiscal year, 2018 fiscal year. We're going to be at 5% of GDP. And when you think about the fact that government spending makes up almost, that we're approaching 20, I think we're somewhere around 22%. That's federal government, by the way, federal government spending. When you throw in your cities, your counties, your states, right, government spending probably approaches somewhere between 25 to 30% of all GDP. Way too high. Right? Think about what our founding fathers would think about that. But when you think about it, this is 2018, and all that I'm asking you to do, I want you to just think about the next 5 to 10 years. I'm 47. Okay, I'll be 57. Right? My oldest son will be 28 years old. My younger son will be 25. The budget deficit numbers then are going to be north of $2 trillion a year. We could easily be seeing 3. And depending on whether or not we're going to cut everybody's Social Security and Medicare payments. And I don't know what GDP will be, but I do know that GDP doesn't grow nearly as fast as the deficits grow. I mean, maybe in the next 10 years the GDP's $25 trillion. That would be a lot. That would be actually that would be a good 10 years. Hey, we're adding $500 billion a year of growth, and really it's mostly $500 billion a year of inflation to the economy. But then you start looking at those debt to GDP numbers, and instead of it being below 3% or 5%, right now all of a sudden we could be looking at 10%, right? Maybe a little more than that. How do you think the rest of the world is going to deal with that? And do you really think they're going to want that type of money? Patriot Radio News Hour. We're going to finish that thought when we return. Welcome back, Patriot Radio News Hour. Our toll-free number, 800-951-0592. By the way, I'm going to have a little Christmas special coming up here. Coinbase, one of the largest Bitcoin marketplaces, it's the one here in the United States, suspending all buying and selling of Bitcoin right now. So due to the price route, I guess they just shut it off. The U.S. 10-year note at 249. I know earlier this year, as we had the 10-year note run up a little bit, and then it came crashing back down. They said anything above 2.6 was going to be devastation. So I don't know. Again, maybe that was, kind of the way of the 3% GDP on debt. But 249, that's the highest I've seen it in quite a while. The Dow is down 50 points. Gold and silver are rallying, and again, that's kind of expected. Not a surprise there. I'll say this: the next time gold crosses 1,300, maybe the last time. We'll see, but it could very well be the last time. We may not see, anything below 1,300 again, at least with fiat money anyway, and Federal Reserve notes. And as I was telling you before the break, all I'm asking you to do, right, put down the day-to-day and tax cuts and budget extensions and North Korea and all the other things that are out there. Right? So put it all down. And let's focus in on why it is you need to have wealth insurance, why you need to own gold, why you need to own silver, and the answer is debt. Right? And you think of Wall Street, that's just debt. That's all that is. You think about the bond market, right? The bond market's debt, right? All of that stuff is debt. And you start to think about the fact that the USA Today yesterday said, hey, we could be $1 trillion right now. You know, we're just putting pen to paper here, and this is what stuff costs. And that's a year or two ahead of even my timeline. And I start to get nervous. Because at what point does the rest of the world say, you know what, not as interested as I used to be in owning dollars? And I start thinking about the Chinese, right? And we'll see, but next week, maybe the week where they turn on you can trade oil futures and contracts and essentially buy crude oil using the Chinese yuan. This morning, Pakistan, and I know it's only Pakistan, but a lot of people live there, announced, hey, you know what? Think we're going to start just getting out of dollars and starting our trade with China using the yuan. That was essentially that was their announcement today. We're going to do all our trading with the Chinese in yuan. And you start to lay the foundation. And I talked about it the other day. You know, there's only a few currencies you can use to buy stuff in this new global world. You have to be a reserve currency in order for a trade to clear. If you wanted to do, buy a tanker of crude oil or buy a tanker of soybean or buy that's the only way you do it. Nobody, and I shouldn't say nobody, hardly anybody uses the Japanese yen. Right? And of course, there's a really simple answer to that. They have so much debt and their currency is completely worthless, and nobody really it's like funny money, right? So they don't use it a lot. I think less than 2% of all transactions in the world are done in it. Right? Then you've got the pound sterling, and that one it's not as debt laden, if you will, as the Japanese currency. But again, it's just the UK. It's small. Not a lot of people use it. Then you have the euro, which again everybody since its inception, when they talk about the euro, like that's just a temporary currency. Right? It's not going to last. And I didn't understand it as much as in the late 90s as I do today. Now I get it, right? Because, of course, it's not going to last, right? You have all of these countries that have massive debts, and they tried to, a way to extend it was by making it bigger. And they use it. Right, because they're trying to prop up their own and give it validity for a while. And then there's the U.S. dollar, which the vast majority of the trade in the world is still done. But they just let the Chinese in. Right, and remember, we made a big deal about it. And I said, this is going to change the landscape. And now, they didn't, just like the Chinese do, they didn't make a big splash. They're waiting. They're doing it gradually. But in the next 5 to 10 years, just think about how much trade's going to really be done and whose currency they're going to use to do it and where are they not going to use. Patriot Radio News Hour, final segment coming up. Final segment. Told you I'm going to do the specials that I have real quick. I've got 15 rolls of Silver Eagles that I'm going to do at $3.85. That's so you're saving $10 a roll, which that's 50 cents an ounce. Got 15. I've got 20 $20 Liberties, and both of these are in stock. I have them here. I got 20 $20 Liberties at $13.20. And this is going to be until Arlene goes home today, or we sell out of them at 800-951-0592. And I just think about there's no way that with the amount of debt that we're going to be adding, that it's just going to be a great opportunity. It's going to be, again, 2017 is 2001 all over again. I remember when I started here, especially really in 04, 05, 06, I got every other call. I should have listened to Eric in 2001. I should have bought then, gold was $300. Yeah, same thing right now. $20 Liberties, $13.20. Silver Eagles, $3.85 at 800-951-0592. And I want you to think about where the dollar's going to be headed. Yeah, the dollar's at 93 and change right now, and it's had a bad year. The dollar and gold, dollar's down about 10, 11%. Gold's up about 12. I mean, they're following each other. As the Chinese start trading in yuan globally, where is it going to come from? I mean, it's not coming out of yen or pound sterling or euro. There's not enough going. It's going to come out of U.S. dollars. Pakistan announced this morning, hey, when you're ready, we're dropping dollars, and we're going to go to the Chinese yuan. And China is the largest consumer now of everything. No one consumes more oil than them. No one consumes more steel or iron ore or, all of it. And now they're going to open up their trading desk, and there's going to be less and less demand to hold dollars. And how do countries hold dollars? They hold dollars through treasuries. And now you think about, we're selling off, the Federal Reserve is selling off their balance sheets, which that won't last that long. I think sometime maybe they get through 2018. I don't think it lasts through 2019, and they're going to have to start going the other way. But then, you think about whether or not it's a good or a bad number, doesn't matter. We are going to add $1.5 trillion worth of debt in 2018, give or take $100 billion. That needs to be sold, on top of all the debt that needs to roll over, which is somewhere around $7 to $10 trillion, depending on the year. And by 2025, 2027, and the debt's going to be about $40 trillion. What do you think's going to happen? Think the dollar's going to increase in value or decrease in value? Patriot Radio News Hour, 800-951-0592. Everybody have a great Christmas. We won't be back till Wednesday. We'll talk then.